When we talk about this AT&T restructuring, obviously trying to rationalize its acquisition of Time Warner, bring HBO perhaps more into the fold in terms of AT&T's core strategy. Does it change the equation at all? I mean, we actually see them becoming more budget disciplined in the entertainment area. Netflix, Amazon still kind of spending all out.
It may change the equation. Look, this is the year of OTT. So you got Apple, Disney, and now AT&T, Apple, AT&T, and maybe others that are going to try to launch streaming services this year. And why are they doing it? Because they watch this Netflix beast, which has been one of the top 5 performers in the S&P 500 for the last 5 years. They've amassed 140 million global customers. They're adding about 30 million a year, and they've got pricing power. They've got magic, and so other people don't want to attack that market. Whether Netflix has a sustainable competitive advantage, it probably does. This is a scale business. Netflix is going to spend this year almost $14 billion in cash out the door on content. Very, very few companies can match that. Okay, Apple could. You know how much HBO is spending on content? It's about $4 billion a year. Like, Netflix is actually dramatically outspending them. So I think it's going to be hard for somebody to catch up to Netflix. But the space is big. There's clearly a dramatic shift that we're all living through away from linear TV towards streaming TV. Netflix wins. There can probably be another winner or two, though.
There's a number of subscribers for Netflix at which scale works, it becomes profit leverage and everything else. Do we know that number?
No, not really. But it's discretionary on the company's part. I think that's a key point here. Like, if they wanted to turn profitable, they're going to burn about $3 billion in cash flow. They did last year. They said they're going to do about the same level of burn this year. And then the burn's going to start coming down. If they wanted to cut back a little bit on original content, they could reach profitability more quickly. What they're doing is they're going to invest as aggressively as the market will bear. That's us, the financial market will bear. And I think the market, if they can sustain those kind of growth rates, it's 30 to 40% top line growth. I think the market will be willing to give them more and more debt in order to get through eventually to break even, and I think that's like 3 years away.
Speaking of investing as much as the financial markets will bear, Amazon, different calculus there in terms of what they're doing in terms of their streaming business, but also all their businesses. So what do you make of this declaration that they want to get more aggressive in grocery at this point?
Well, they kind of crossed the Rubicon, if that's the right expression, 2 years ago when they bought Whole Foods. There's a trend going on in the internet. We call it the physicalization of the internet. The move by Amazon to actually get into physical stores. They've got these concepts. They're not here in New York yet, but they will be soon, and in New Jersey soon, too, of these Amazon Go stores. It's literally you walk, you scan, you pick, you walk out. No cash, no cashiers. So next time you're in a store and after you've already picked out what you want, and you're waiting in line to check out, that's going to be your aha moment. Like, why didn't I go to an Amazon Go store? We've had 2 of these in San Francisco. We did a report on it. I think I think what Amazon has done is they've solved the time problem of shopping.
Wait, I have to scan it, or it just knows what's in my cart? Because the places that I go where I have to scan it, I've never made it through one of those lines without having to ask for a cashier to come over and help me because there's a problem with the scanning. There's something that's not right. I can't figure something out. I thought this was going to be the ones where I just walk out and it knows what's in my cart.
Now, it's a little unclear what they're going to do in the grocery stores, and groceries is going to be much tougher. Anything that's got a barcode on it, okay, you can grocery.
Like, if you go through and you're buying $300 worth of groceries and you try and do it yourself, it is no fun task.
Now, remember, these are cameras, though, that are tracking, so you're not scanning out anything. You're literally, the cameras check what you take off of the shelves and what you walk out with.
And they
you don't
never
have to
mess up
scan
if
anything.
I put it back in the wrong place on the shelf. I look at it and decide I don't want it.
They will track if you're putting stuff back up and back on. Yeah. Now, the one problem, though, is you're getting into groceries. Now, you don't barcode asparagus. You don't barcode steaks. So,
right, how do you know how much I just picked up?
Yeah,
like
so whether they can figure, the cameras and technology can figure out weight of products, that's going to be a little more tricky. So I don't know if they can roll it out with groceries, but for other, sort of consumer staples, they can do it.
My bigger thing is I was excited when they bought Whole Foods because I thought, great, now I'm going to be able to order online and get it delivered by tomorrow, maybe even by today in some circumstances. I've tried that service, and it kind of stinks right now because it's basically just the guy next door runs over there, picks up the stuff, puts it in the cart, tells me that 7 of the things they told me 2 hours ago I could have aren't in stock, and they bought something else that's kind of similar but not exactly the same, and it's never something that I can actually use.
I think what Amazon kind of learned, and maybe it was a little bit of humility on their part, was people aren't going to buy everything online. People, there's a,
Oh, I would if you could figure it out, but you have not figured out how to figure out what you have in stock and how to supply it and how to actually get it here.
There's that challenge, but no, there's 90% of sales still occur in physical retail, and Amazon realized if they really want to get a lot bigger, they need to have a physical footprint, and that's why they bought Whole Foods, and they're probably going to, and with these stores, these Amazon Go stores, what they're trying to do is, can we do something that's different, better, more efficient, saves money for consumers, and also offer them omni-channel, the ability to buy it online and buy it in physical stores. It's called the physicalization of the internet. And Amazon, this is a big bet that they're making. Whether they get it right or not, I don't know. They've been pretty good in the past.
They're going to also, this is going to be driven by this push for $15 minimum wage. Because if you look at even the traditional grocery stores are going to move towards this now because they can't afford it.
Right.
They're not going to be able to afford to pay cashiers $15 an hour.
Although it costs money to buy the technology to be able to not have cashiers.
It does, but their view is that from a tax perspective, it's going to be smarter for them to do that over the long haul than it's going to be to pay a $15 minimum wage to an 18-year-old. To scan groceries, and so we're going to have to get used to doing that no matter what, Becky. It's coming.
I hate it.
It's coming, and you can thank like Bill de Blasio and Phil Murphy and others for that.